Another week for the bulls. Short, sweet, and void of volatility. And last time volatility was this low was in 2020, right before the crash. Hello, ladies and gentlemen. Welcome to the Daily Recap Show, where we talk about stocks and the financial markets. If you like this video, please subscribe, hit the notification bell. Let's get into it. And the week was short, but the breadth was great. Technology and communication services as a whole underperformed, while the rest of the market in general gained. It was really the big names. Apple, Microsoft, Nvidia, Google. They were the lackluster performers, while defensives, healthcare, utilities, materials, energy, financials saw big inflows today on what you will definitely say is very, very low volume. But like I said, breadth was fantastic. 1,500 decliners, 4,000 plus advances, and the big seven, the magnificent 7 or 8, was sort of positioned right here where the rest of the market was in the green. Looking at sectors specifically, we saw the growth sectors, discretionary, technology, and comm services. They were the lackluster performers for the day, but healthcare, energy, staples, real estate, they were the ones that really put up big changes as a whole on the market. And if you actually look at the sectors over the last 5 days, you can see some very, very interesting shifts happening. Look at the best performing sectors over the last 5 days: materials, insurance, gold miners, energy, healthcare. And look at the ones that are underperforming: technology, solar, semiconductors. There's been what you could say is a rotation or maybe a broadening out from growth into more of the defensive style assets. We really have to see this continue into next week, December 2024, before we make any final statements. This really is the opening innings of such a rotation, and we'll see if it continues, because it might not. We might just get a technology rally next week, but I will keep you guys updated on how sectors perform in the future. All the while, investors keep on getting greedier. I said we are going to push into extreme greed. I stand by that. Just yesterday we were at 67. We were now at 68. 1 week ago we were at 58. The market is definitely getting more greedier, and that just means getting more bullish as we go along. But we are closer now to extreme greed than we are to neutral. And this is further shown on the sentiment survey. We had an uptick of about 2% in the bullish spread from 43.8 to 45.3, and a decrease in the bearish spread and a slight increase in the neutral. So we pretty much had everybody that was probably bearish move into the neutral territory, move into the bullish territory. And sentiment is getting really bullish. And when you see really bullish sentiment, but under the hood, more of a rotation into the defensive sectors, you want to keep a strong eye on what's happening next, because this could be the start of something that could be brewing. Keep an eye out on this as well as sectors over the next 6 months. We just wrapped up the Nasdaq Turkey wrap, and for those of you that don't know what it is, long story short, if you had the trailing week, the previous week, as positive, normally what we see is a Wednesday to Friday that's normally positive, upward of 1%. This has happened 30 times with 30 wins, 0 losses. And after this week, 31, 0 losses, because we put out 0.4% on Wednesday and a 0.6% on Friday, for a total gain of 0.47% for the week. Normally what we expect is a 0.64% on Wednesday and 0.39% on Friday. Just goes to show that this Nasdaq Turkey wrap is a very, very positive stat. And I actually looked further. If you had bought at the start of Wednesday, closed at the peak on Friday, you'd be up 49 points, upward of $2,000 on the standard ES mini lots. Heading back into market internals, we saw a massive VIX crush, 4% from peak to trough on the day, but that was because we opened higher. We bid up, stocks bid up, VIX bid up, but we did come along and crush at the end of the day, as we did see a huge amount of stocks up, 4,000 stocks up compared to 1,500 decliners. And on today's VIX crush, we did see a mild uptick in treasuries. Treasuries are pretty much flat on the week. Up today, that's because the market was closed yesterday. I wouldn't take this as anything. And I do have some commentary on rates looking forward. Scott Ladner from Horizon Investments has said that the market's expectation for the volatility of interest rates is continuing to collapse. And that's telling, because the market is coming on board finally with the idea that 4 to 5% rates is the right level for 2024 across the curve. And it seems like for now, for the next 3 to 4 months, 4 to 5 months, we are probably going to stay in this 4 to 5% range with expectations of a 30% rate cut in March. And rates are directly proportional to margins. And this is Bank of America's margin expectations for 2024. Very interesting stuff here. And the sectors that'll be performing the best on a margin outlook: comm services, technology, and healthcare up there as well. Have a look at this across all of the sectors, from discretionary all the way to comm services, right? We are actually going to see a increase in margins, and pretty much how they've coded it is you're going to see a margin increase in the sectors above 1 and a decrease below 1. And the only sectors that are going to decrease their margins are staples and real estate. Very, very interesting stuff. So 2024 should see margin expansion despite higher rates. And it doesn't look like they actually have rates in this calculation here. So if rates do come down, let's say we do get the 150 basis points of cuts we are expecting next year through to 2025, we could actually see an uptick in margins, which means an uptick in profits. And if you have an uptick in profits, an uptick in margins, and an uptick in earnings, that's how you extract alpha and capital appreciation as an investor. And have a look here. We do know that earnings have bottomed, and this is the S&P 500 trailing 12-month EPS once they've bottomed and how they recover. And normally the recovery is much stronger than the actual bottom. So once we make a bottom, we have an extremely strong recovery within a 12-month period, upward of 5%. And we are heading into the most bullish week of the most bullish month. We just had a plus 1% week, this right here, and we do expect further gains into November. Of course, these are just stats. They are recurring price actions, and a lot of this is based on the low volume we see this week, OPEX, fund flows, and we can expect further gains into December. December is one of the best months for a pre-election year, up 72.2% of the time for a 2.9%, nearly 3% gain. Very, very bullish stats. And December is normally bullish because of the end of year flows, shortened trading month, and we also have something called the Santa Claus effect. These are some stats here for the S&P 500 and the Russell 2000. It's the Tuesday before Thanksgiving to the second day of the new year, and you can expect an average gain in the S&P 500 2.57%. This happens 80% of the time, 58 wins, 15 losses, for an average win of 3.78% and a loss of 2.31%. And today we ticked up about 1%. And if you are following the stat, you could say, okay, things are looking positive. We are expecting about another 2.5% increase in the next 4 to 5 weeks of trading. Very, very interesting stuff. But let's hop on the chart and have a look at this. This is the year-to-date chart of the SPY, the S&P 500 ETF Trust by State Street. And we've had a very strong year-to-date performance. As you can see right here, guys, on my videos on the 25th and 26th of October, I said buy this dip because we moved into positive gamma in this area right here. And what do you know? We absolutely rocketed up, leaving plenty of gaps right here, here, another gap here, actually a gap here as well. And we've had some very strong candles, especially this week. We had a plus 0.9% day on Monday, and we have left some pretty indecisive candles up top here. I'm not much of a technical analyst. I prefer fundamental analysis, option flow, seasonality, but I believe they call this a turtle candle and a long leg doji. Very indecisive candles, but have a look right here. Sort of same thing, rocketed up. Same thing, rocketed up. So these types of candles don't really mean anything. What really matters is options flow and where we are in the seasonal period, as well as fundamentals, earnings, that sort of thing. November, this week in November tends to be the most bullish week of November, this upcoming week. And if we can go ahead and break 460 level, which we do know is the high gamma zone. I put this on my Twitter, on my X. Go ahead and follow me on X, guys, and hit the subscribe button down below for more of these videos. If we go ahead and hit the 460 level on the SPY, which is the 4600 level on the SPX, and if we close above this level, it's going to be extremely constructive for bulls because we would have captured the high gamma strike, and we're probably going to shift that high gamma strike even further up, maybe to the 4650 level, maybe even the 4700 on the SPX, 470 for the SPY. If we do exceed some form of a pullback, I do think it's going to be met by buy demand. I think anything below 440 is bearish, but anything above here is pretty bullish. And I do expect all pullbacks to be met by bull demand to go ahead and eventually break this 460 level before the end of the year and reach the new all-time highs in 2024 of 4,800 in the S&P 500. Looking at some unusual options activity, it was a very low volume day. As you can see, 56 calls, 44% puts. People are still very bullish right here. 18 million total options contracts, and there wasn't much to go on. We did see some unusual activity in Coinbase. They've absolutely rallied in the last week or so. 2.76 times 90-day average volume, as well as Wells Fargo and Charles Schwab. They had some pretty decent volume above their 90-day average right there. So a bit of the financial names, as well as PayPal, coming in beating their 90-day volume averages. But you know, guys, low volume doesn't really mean anything right now. I'm really keen to see what next week brings. If you've made it this far into the video, please like this video, subscribe, hit the notification bell, leave a comment. You know I love you guys.